Good morning, traders. Today is the 14th of October. My name is Neville Hornsey, market analyst for YouTrading, and today we'll be looking at the CAD versus the yen. Now, anyone that follows us on YouTube will know that we spoke about the CAD versus the yen last week. I just want to do a quick update. Here we've got the Forex heat map from YouTrading.com, and you can see that the yen across the board is red. If we go down to the Canadian dollar, it's pretty much green. The commodity pairs are green at the moment, as you can see in the bottom left-hand corner, apart from against the Aussie, which is one of the strongest today, and also the New Zealand, which is the strongest today. So the CAD, Aussie and New Zealand are all doing really well. This is on the back of a weakening US dollar, and that is to do with lots of things like interest rates and inflation and things like that. So a weaker dollar, good for commodities, and the yen is also being disrupted by they're basically just having a general election. So there's a certain amount of uncertainty, and there's also bottlenecks within manufacturing and things like that. So the yen is bad. Commodities are good. So we're going to look at the CAD versus the yen, but we could look at the Aussie or the New Zealand versus the yen. It's pretty much the same sort of thing. All right. So if we go to the weekly chart this time, the CAD versus yen, the CAD, as you can see here, has risen against the yen. It's appreciated. If I just zoom in, you can see that we've taken out this swing high from the May sort of 2021. I just want to bring your attention to these two swing highs here. So we had February 2019 and then January 2020. A good resistance level got broken in February 21. Big rise up to previous resistance, and then come back down, tested this old resistance, and now that's support. So that's why I've got this big green line here. So we know where support is on the weekly chart. If we look left, we've got previous, if I just get an arrow actually, got previous support here. That is back in 2014. Then we will look to the right, and then we get to this breakdown, retest, consolidation before a continuation lower. So around here is resistance, but then we look to the right, we find that previous support becomes resistance, get a double top. Now, I love double tops because that's where I believe retail traders, basically anyone who's investing, will put their stop, because they believe that something like this, where you get a breakdown of structure, retested, becomes resistance, and the safest place to put your stop is above this previous swing high, and a double top is almost like confirming that that is resistance. So that's where all the stops are, and as you can see, we've taken out this swing high, and we're just about to accelerate through this double top. So that's why I'm excited about the CAD versus the yen. I think there's going to be a big blow through this level. So 91.5 to 92 really. Then we've obviously got this area balance here, which could act as resistance. So we've got basically from where we are now, I think there's going to be a big push through. Then we've got this candle here, the weekly candle from October 2015. This is essentially like the last of the buyers, who tried to defend this level back from 2014. So you've got to think back to 2014, some sort of buyers were there. They thought they'd try again, got a big wiki candle here. You can see it pushed through in 2015 in August. They really tried to defend this level. Then, thinking that they had, retail got in, but everyone here who saw the break of market structure thought, no, actually, I just want, as retail buy in, I'm going to sell off, and that's when you get this big move to the downside. So it's a flip zone, but obviously this candle here, green candle, is the last of the buyers, and that's where the sellers came in. It sounds weird, but I guess people would say dumb money bought and smart money was selling, and they used each other's trades to trade off each other. So if smart money there was selling, that's where supply is, that's where it could come in again. So, this next sort of 150 pips is going to be crucial for what happens next. And assuming that we get through this period here, then I'm saying it's going to open up even higher. So I'm looking for take out the swing high, come back down to retest the 91.50 before going higher. So what could do that? Well, obviously we've got a weakening yen. That's a given. And then we've got a strengthening CAD. If you look to the dollar versus the CAD, you can see that the dollar is weakening and the CAD is appreciating. The CAD appreciates on the energy sort of complex. So we've got a rising, in this here is the Brent crude contract. So we can see that oil is still rising. That looks like it's going towards 90. That'd be a measured move of this correction. So this trading range here, breakout, obviously retest, continuation higher. A measured move is very possible. So $90 is kind of like the target. Dollar CAD is benefiting from that. We also go to the US dollar index. I'll come back to a weekly chart on that as well. You know, the same thing, we're just looking at the CAD Japanese yen. You know, support became resistance again. So like I said, like when you get to this sort of level, if there's still sellers there, then this is the sort of reaction you can have. Fundamentally, I'm bearish to the US dollar anyway. But obviously, you know, you can't fight the trend too long. And we didn't take out this swing high. So this is key. This swing high here on the dollar index from September 2020 is, you know, if we get above that, then, you know, this whole thing that I'm talking about on the CAD yen happens on the dollar index, and then maybe this doesn't happen. So CAD yen for me is we get above this swing high, which I think we will because we've got momentum from the Canadian dollar and depreciation of the yen. Break up, pull back, and then continue higher. All right, so where do we go to? So assuming that that all happens, we can put our stops under, you know, this sort of break up, retest, makes a swing low, put your stop under there. Then you've got to watch out for this little balance area here from August to 2015. Get through that, then the target is the swing high here from June 2015. So assuming that we get a good entry here, you know, and we can put a tight stop in, the reason for doing this trade would be to try and get from here up to this level. So that's 400 pips. Obviously, if we get through that sort of a period here, this little balance area, then we've got a possibility of, you know, like 900 plus pips. So I'm saying for a small risk, we could be making somewhere between 900 and 400 pips. You know, you choose your targets. That's what I'm looking for, and they're the reasons why I'm looking for it. So I'm excited about the CAD yen. I think this green candle here from 2015 is crucial. If that clears, then yeah, it's going to be a good trade. Okay, I hope that was informative, and any questions, please leave them in the comments below, and I'll speak to you tomorrow.